Okay, you can read question number 2.
It says Barbarossa Limited manufactures and sells one product.
You can go through
Selected cost
question
and
number 2.
operating data on the product for 2 years are given below. So they have given us the selling price, the manufacturing, and the variable, and then the fixed per year, and all that, the units produced. And it says there were no opening stocks on the 1st of January 2019. Okay. And then it says prepare the income statements of Barbosa Limited for years 2019 and 2020 using variable and absorption costing. Hello? The network is really bad. I don't know. Zambia.
Okay. All right. Sorry. Can you hear me now?
Yes, sir.
Okay. I didn't get your reading of the question. Could you go through it one more time?
It says Barbosa Limited manufactures and sells one product. Selected cost and operating data on the product for 2 years are given below. They've given us the selling price, the manufacturing cost, the selling and administrative expenses, the units produced and sold. And it says that there are no opening stocks on the 1st of January 2019. And it says prepare the income statement using variable costing and absorption costing.
Right. That's fine. So we want to start with absorption costing. So it has got the 2 columns, so you can put whatever. What units I use here? These are pounds. Anyway, I'm used dealing with dollars, but whatever units you can put. Even use pounds. Yeah. Okay. Just 2 columns. So for 2 years. So we always start with sales, just as we said. Sales. Now the sales that we have for 2019 and 2020. Yeah, we have the data for 2019 and 2020. You're following?
Yep.
Yes. So now, since we have these 2 years, then we're also given the selling price. So basically, to find the revenue, you multiply the unit selling price times the quantities sold.
The quantity, which is, yeah.
So the units sold at 800 and 8,000 and 7,000 in 2020. So you say 50 times what? 8,000. That is for 2019.
Yeah.
Again, 50 times 7,000. That is for 20 what? For 2020. Okay. So for 2019, what do you get?
2019, I got 400,000.
Yeah. I think it's better we even write the years on top so that you can follow nicely. So this will be 2019 data. This will be 2020. So you got 400,000.
Yep.
What about 2020?
350,000.
350. thousand. You're able to see it, yeah?
Mm-hmm.
And so from there, we can list now the cost of what? Goods sold. So
Yeah.
you less
But we had opening stocks in
cost of goods sold. So now this is
yeah.
how it is done. When you start listing the cost of goods sold, let's deal with 2019 first so that you understand properly. Here, we start with the opening
Okay.
inventory, opening stock.
Yeah.
We are
Which
told
is
that
zero.
there is no opening stock. And
Yeah.
to the opening stock, we are to add the production. Okay. We are to add what? Production. This is very interesting. We need to add the production. Now, this is full costing, right? It's called the absorption costing. So we are considering the cost per unit, okay? So we get all the costs that occur in the manufacturing, in the factory. Yeah. So all the manufacturing costs is what you consider. Pay attention to that. You just need the factory costs. So basically, you get these variable costs per unit, like these units. Have you seen? They are all manufactured.
Yeah, we
Direct
add them 6 plus 3 plus 2.
Yes, that gives
Right?
us yes, that gives us 11, right?
11, yep.
Yes, but again, we are aware that we also need the fixed costs. If it were variable costing, we could have just used the variable
11,
cost.
basically.
Yes, but now we need the other ones. How can you go about it?
So basically we have to we also have to get the variable, right? So we add the 2 as well.
We have added 6 plus 3 plus 2. Which variable? This one is administration.
Okay.
This is administration. So it's not part of manufacturing. Remember, this is a selling and administrative expenses. So we don't sell in the manufacturing, in the factory, no. Remember, selling is done outside. So it's non-manufacturing cost, this one.
Okay.
So at this stage, we're just interested cost of production. So we just want the cost that is incurred in the product, in the production area, that is in the factory. Yeah, we just want manufacturing costs. What can we do?
10 plus 6. Because we have to get we have to get all these because there's something that's added apart from the manufacturing cost as well, right?
We need to add also the fixed costs. Now we have added, these are units, so we need fixed costs per unit. How can we find fixed cost per unit? That's the question.
Oh, we divide the 30,000. Well, I don't know whether it's a 30,000. Wait, let me try.
60,000.
60,000 divided by the 6
The
plus
units
3 plus
produced.
2. Or just the units produced?
Yes, so we want fixed costs per unit. These are variable costs per unit. Direct material, direct labor, variable manufacturing, they are per unit. So this is fixed cost. We are just given the total amount. So we need the fixed cost per unit. Basically, dividing this by what? Yes, by the number of units that were produced in 2019.
Units that were produced. Okay. So 60,000 divided by 10, huh? Divide by 10, 10,000.
That gives us 10,000, yeah?
Yep. That gives us 6.
So that's 6. So we can now add, this will be now 6 here.
So
I found
the 6 plus 3 plus 2, which is 10. No, which is 11, right?
Mm-hmm.
11 plus 6. Wouldn't that be 17?
Yeah, it's gonna be 17.
Okay. Because on the max
So
scheme, it says 16.
yes, that's why I'm saying that it's like there was just an error. Yeah, somewhere you will see it
Oh,
when
that's
it comes
why I
to
got
2019.
confused. Okay.
It will agree. When you go to
No wonder.
2019, you see.
Yeah, okay.
So 17 times 10,000. You will see that when
That's
you use
100 and
17, you even in the answer that you find it will agree. You'll be surprised. Try it.
yeah,
17 times 10,000.
that is
How do you get?
170,000.
Exactly. Which is the same figure in the marking scheme, yeah?
Yep.
You're fine now?
Yeah. Now I've understood where I went wrong.
Mm-hmm.
Yeah.
Yeah, so then from there, we need to list the closing what? Oh, yeah. So we can even, okay, let's finish first for 2019 so that we can move properly to the other one because we need
Yeah,
to
let's
use the
just
close.
finish.
So you need the closing stock now. The closing stock.
Mm, okay.
Let's do the closing stock for 2019.
That we are the closing stock the closing stock is 2,000, right?
How do
Because
you get the 2,000?
we only sold 8,000 and we produced 10,000. So remaining what
Right,
2,000.
exactly. So at how
Yep.
much are you selling that? At 17.
So yeah, it's 17. So 2,000 times 17, which is 34,000.
Uh-huh. Have you seen that this side the figures were agreeing, but here it's just the amount that that had an error, yeah?
Mm-hmm.
Yeah. So that is 34,000. So you can deduct the 34,000 from that 170 so that we can find how much
170 minus 34, which is 136. So
136.
how come this one looks like more simple than the one that we did in the exercise?
Then the one that we did in the exercise.
Yeah, that one was more complicated, to be honest.
Yeah, it just it's about the data that you have been given, you know?
Yeah.
Yeah. So it's 136. So 136, we less it from this from 400 something. That's 136. What do
That
you
is
get?
264,000.
264,000 as the gross profit,
Mm-hmm.
gross margin. Okay. So now from this, what do you do next? We
We
can less
minus
now non-manufacturing.
264 and 46.
Yes. So we can less now the non-manufacturing.
Yeah.
Remember, these that we considered were manufacturing costs only. So before the gross profit, the gross margin, you need to consider only manufacturing. I made this point. I'm making it again. We're just interested in the manufacturing costs only.
Okay.
Then after the gross profit, now we can less the non-manufacturing what? Non-manufacturing
Manufacturing
costs.
cost.
Which are these now? This is where you have administrative variable cost and the what and the 30,000, the fixed one. So the variable one is 2. You get it, eh? Is 2
Yeah.
per sold because these are units variable per unit sold. So it's 2 times the units sold in 2019 were 8,000. So 2 times 8,000 gives us what? 16,000, yeah?
Yeah, 16,000,
Plus 30,000, which is
which
fixed.
gives us 46,000.
46,000. And
Yeah.
what's the difference?
So 264 minus answer. You get 218,000
Yes, as the operating profit before tax.
before tax. Yeah.
218,000. This is the operating what? Operating
Profit.
profit before tax and interest.
Mm-hmm.
Now, the only difference is that when you go to 2019, 2020, the closing stock shall be your opening stock. So you'll have the
Stock,
opening
yes.
stock of 34,000. The rest is still the same.
Oh, okay. So we do 2,000 times 17 again, which is 34,000.
Which 2,000? Yes,
No, because
that's
the
the same.
closing stock
Oh,
that we
okay.
got 17 times 2,000, which was 34,000, will come back here.
It will be the opening stock. It's more like, you
Yeah, it will
remember
be the
the way
opening
how
stock,
you set up the
yes.
account?
Mm-hmm.
The balance
No,
carried
I'm
down
just,
is equal to the balance brought down.
yeah, I'm just saying that the 34,000, how we got it, will be the opening stock of
Oh, okay.
2020. Yeah,
Exactly. Now, we need
okay.
the cost of production. Cost of production, how did you find that one? In the similar manner.
Mm-hmm.
You need the cost per unit, isn't it?
Yeah. So we get
Total
60,000.
divided by 6,
6,000.
that will give you 10.
Yeah, that will be 10.
Mm-hmm. So
Plus
this
we
10
add
now
the 11
as 21.
times 7,000.
So that's 21
No, times 6,000.
times 60,000. Okay. You now
Yeah.
understand, Robbie.
Yep, I've understood.
You have
Do you
126.
have more practice questions like this? Please send them to me.
Okay, let
I'm
me
sure you
look
have.
for. I should look for.
Yes, please. Please do that.
Don't worry.
And then closing stock, we had 1,000.
Mm-hmm.
So
Which will be
1,000
21.
times 21.
Which will be 21,000.
Yeah, so 21,000.
Mm-hmm. 21,000.
Now we are going to
So add the opening stock plus the cost of production. Then you deduct the
subtract it by 21.
deduct the closing stock.
34,000 plus 126,000 minus 21,000. 139,000.
Yes. Now that you deduct from 350,000, which is the revenue.
So 350. 211,000.
211,000
Yes.
as the gross
And
margin. Then you can less the other one.
the
The variable is
non-manufacturing will be, sorry?
yes. The non-manufacturing will be
2 times 7,000 times plus 30,000, sorry.
yeah. Giving you how much?
Plus 30,000, just a minute. 44,000 if I'm right.
Okay. So what's the difference?
So 211 thousand minus 44,000. 167,000.
167,000. Any questions?
No, sir.
Score is easy, huh?
Yeah, it is.
Yeah, it is very easy. So that's about that. Can I try the variable one?
The variable one, I've done it, sir.
Oh, you have
I
done
got
it?
the answers. Yeah, I've done it. I just
Oh,
want to
yeah, that
ask you
one.
that now if you go to B, how can I say like what reconcile and comment briefly? So like what am I supposed to say? Because I'm sure the following questions will
On the
be
differences
similar.
in operating income obtained in each year. Reconcile and comment briefly on the differences in the operating profits that have been obtained each year. Now, the difference is between what? Which operating profit?
I said I was confused. Like, what am I supposed to?
Yeah, because mostly the reconciliation is usually done between the one for variable costing, the answers you get from variable costing, and those from absorption costing. Usually, that's where because you find that the net profit from variable will not be the same as that one from
Absorption
costing. Yes. So that's when you can reconcile. Like that's when the reconciliation is done. Like unless we assume that that's what the question is asking.
Okay, because the thing is, he hasn't even given the answer in the answer sheet.
So reconciling, like if you're reconciling this is where you just show the differences. For example, the reconciliation statement is done like this. You have, for example, you start with the net profit for variable costing. That profit you found under variable costing, right? Then you deduct you add the differences. Add the differences. What difference? Difference between the profit that you get for absorption costing and variable costing. There will be that's more different. You get since they won't be the same.
Okay.
Yes. When you do the additions of the same, then you can adjust. You can adjust for under absorption and over absorption. Adjust for under absorption / over absorption, and usually this one is a minus. Over absorption you deduct, then under absorption you add, and then what you should end up with is the net profit for absorption costing. Like you have the statement.
Okay.
So now the statement will be made like this. Afterwards, you will mention what causes the differences between these two figures to be different. What makes them to be different? Like usually, what makes them to be different is the valuation of the closing inventory, right? So you will mention that the full costing or absorption costing considers the fixed costs, okay, in the valuation of the closing inventory or in the formation of the cost of production. You get it, eh?
Yeah.
In the cost of production under absorption costing, there is fixed costs considered. But under variable costing, we just consider only marginal costs. We don't add the fixed cost. And because of this,
so basically we
difference,
just mentioned the differences.
yes. So because of that, you find the differences in the answer. Because when you're reconciling, you're just explaining, you're commenting briefly on the differences, where the differences are coming from. So they come from that. You got it?
All right. Yeah.
Yeah. So basically, that is what is there. You don't need to suffer too much. Just have to relax. Yeah.
Yeah. Yeah, it
Any
says the rest
questions?
is fine. Yeah, the rest is fine. I'll just be like